Good evening, everybody, and welcome to Elevate and Illuminate, the Empowerment Podcast, episode 6. Man, this train is moving right along. Seemed like just yesterday I was debuting this thing, and we already on episode 6. Thank y'all for joining me every Wednesday, 7 p.m. It's an honor and a pleasure to have y'all time. My name is Jamarcus Fields. I am your host on Elevate and Illuminate. I am also the founder and executive director of Iron Sharpens Iron WASP. That is WAST, which stands for We Are Stronger Together. Our mission is to empower and equip at-risk youth and justice-involved individuals for successful reintegration into society. And here at Elevate and Illuminate, we aim to enrich, empower, uplift, and inform our communities, just to be better, to pass along information, knowledge. That is the key to iron sharpening iron, where each one teaches one, strengthens one, and we are stronger together. Welcome again to episode 6. Today we will be talking about life insurance, and I will allow my guests to introduce themselves. Floor is yours.
Ladies first.
Hello, everyone. My name is Megan Mays. I am the wife of this amazing man sitting next to me. I have a lot of different backgrounds, but my background is in public health. I was doing that for 6+ years. And now we've transitioned into entrepreneurship. I also kind of stepped into the world of makeup. Um, in between, the life insurance business. And so really enjoying being my own boss, being what we call a mompreneur. I'm a mother as well, mother of
Okay.
1.5 children, one on the way very soon. And so it's really me taking back my time as a mother, a woman, and just, owning that and being a mom boss, period.
My name is Victor Mays. I am the husband of Megan, father of Maya and another one to come. I'm a big brother. I got 3 little sisters. Originally from Indianapolis, grew up, didn't have much coming up. I came up in a background. Both my parents are disabled. But I went to school, got good grades, went to college like a lot of other people, and got my degree in construction management. Been doing that for the last 8 years in construction management. But somebody introduced me into the life insurance industry and brought awareness to me and how I could educate my family. And we've been going strong, helping a lot of other people make an impact in our communities, empowering the people, and also bringing entrepreneurship. Yep.
Wonderful, wonderful. Thank
Thanks
y'all
for
for
having us
joining.
on.
Yeah, thank you, Jamarcus.
Yes. Thank y'all for joining this evening. I'm excited about this conversation. Just within our communities, it's crazy how there's a lot of talk about insurance, but not much action. And we see that, and I'm hoping that the audience definitely will be informed and empowered off of the information, because I think a lot of it comes from either not people, so that way we disarm them of the excuse of I didn't know.
Yeah.
So um so again, we hear a lot of talk about insurance, and I say lack of action because we see far too many times, like, as the death rate continues to climb, we see with a lot of these deaths happening that families just simply aren't prepared. And like, you don't have to be part of the family to tell, because you see a lot of GoFundMe's and stuff that pop up.
Right.
But I wanted to ask you guys first and foremost, what is the name of your insurance company? Like,
Yeah.
Yes.
So the name of our individual agency is called YOLO, which stands for Yielders to Legacy Organization. Our mission is to live a life of prosperity, abundance, and purpose, and overall make an impact in our community. And we're partnered with the company called People Helping People. That's the franchise that we are able to operate our national business. So your question was more geared towards our community and what's going on, the impacts of it, right?
Yeah, just the effects, both positive and negative. The effects of those having it versus the effects of those who don't within our communities.
Yeah. Well, not having it, I always, I never knew. Whenever I graduated from college and somebody introduced me to life insurance, I used to, when you're 21, 22, you're like, I'm not going to die anytime soon. Like,
Right.
YOLO.
yeah, exactly. YOLO, like, I'm going to do whatever I want to do. And, but I actually needed it the most. I didn't know a few years later, my mom was going to get diagnosed with blood cancer. That a year later, that my grandmother was going to get diagnosed with blood cancer as well. So, the but it's kind of like tickets. Like you could be riding on the road. If you ride one way, make the wrong turn some kind of way, you get pulled over. Then be like, "Hey, look, you did this wrong. You got to pay this bill." I had no idea. That's just kind of what it's like when it comes down to our financial lives. But a big reason why people don't get life insurance is because our relationship with money. We don't talk about money in our households. Most black brown families, we shy away from it. It becomes a argument within our personal relationships. Marriages break up because of money. So, like, let alone try to talk about life insurance, right? When most people think the perception of life insurance is, hey, you gotta die to benefit from it. So the negative effects of so that's one. It's not so much that people don't know it's the right thing to do, because we all know, like, hey, we should get life insurance. It's just our emotional relationship with the idea. Does it make sense?
Yes.
So whenever I learned that, when my mom got diagnosed with cancer and my grandmother got diagnosed with cancer, and if they had this life insurance that had living benefits, and we could have got a large sum of money, $50,000, $100,000 from the moment they got diagnosed with cancer to handle future expenses, that was a whole different perspective for me. And most people don't know that you can benefit from life insurance while you're alive. And we only think about the negative side of it. One of the other things about it is America, like, there was a stat that I was reading. Most Americans have less than $500 in their bank account, right? And whether it's our mom, sister, auntie, anything like that, and God forbid, God calls them home, we don't have enough to take care of them and put them away properly. You know what I mean? Let alone if, like, they have a health incident and you need to take care of some random medical bill. Like, so it's a lack of planning, but it's part. I think a lot of the issues stem from us not having a conversation about money and it being normalized in our communities. The
Okay.
benefits of having life insurance is, hey, on the flip side, when life happens to you, then you're prepared. You don't have to worry about it. Like, there's a guy in our office, he's father of three, and just imagine you're a father. There's a lot of parents out there, or just people who have someone they care about, like Jamarcus. I know you have your mom and everything, just somebody you truly care about, right? Um, God forbid something happens, and y'all need a little bit more monthly. You need to pay a monthly bill for a caretaker or something like that, or somebody to help her on her daily. That's an impact, right? Um,
Right.
so like, I'm gonna go back to the story of this guy. So this guy, he's a father of three, well, four, and his wife stay at home. And in that situation, most times that guy's the breadwinner, and that's most American situation. They don't have a plan if so life happens. He had a stroke, right? Most people, That stroke happens, all income stops. So now we're talking because he needs to recuperate because he can't get out of bed because he can't move and he's not gone. He's still alive. He can't provide for his family. So now we're talking about the house being going into foreclosure. Now we're talking about not being able to pay car notes. Now we're talking about not being able to pay, take care of your kids. But you can't physically do nothing, right?
Right.
So, but the benefit to that situation, the positive of that situation, it was with living benefits. He actually had a life insurance policy with living benefits, and he got a check for $225,000. So
Okay.
he didn't have to worry about it. All he had to do was focus on his recovery. That's it. So that's the other positive side, just on the fact that like life can happen to any of us, and a lot of us aren't prepared. And at least the positive thing about life insurance is you can get ahead of that. It can save you whenever life happens. And a lot of other benefits too. People become wealthy, millionaires. It's a wealthy way of doing things. So yeah.
And one thing that I would say, typically, what is the most? I always ask when I talk to my clients, when I talk to people, what are the two most constant things in life? What would you say the two most constant things in life, Marcus?
Life and death.
Right. We're not gonna stop having babies, and at the end of the day, we're all not gonna live forever. So
Right.
we gonna protect our cars, we're gonna protect our phones, nothing we can take with us. But why can't we? Why are we not thinking about protecting our lives? It's almost like, come on now, let's ensure our lives to help the next generation. And like he was talking about, it is an issue. Sometimes when people think about life insurance, oh man, that's about to be 100 something plus dollars. I'm like, no, we haven't even like. It's so much more that is involved. Or grandmas and aunties, we only talked about whole life. That's like
Right.
all it is burial. All you can get is burial. Like no, he talked about the living benefits. There's so many things that can happen because it's for life. It's for the living. And
Mm-hmm.
so I think the things is the historical things that we know about it, or have taught, or even not have been taught about it, or we just kind of took off. This is what grandma, great aunt said. That's what you need to do. It's gonna cost you a whole bunch of dollars. So let's just let's all come together. But at the end of the day, we also do see the struggle that it has on families. I know families who don't even talk anymore. Because when it comes
Right.
down to those funerals, when it comes down to making those decisions, it's breaking up families. It's breaking up just even people even having a conversation with each other because of a funeral, because of decisions that weren't made, the poor planning, like he mentioned, that if we had these conversations, we'll be prepared. We don't have to break up families even in this conversation. So even when we talk about life insurance, it's also about keeping the family together. It's not also just about the individual. It's about keeping the family together. And how can we make sure that my grandkids, my great grandkids, and the next generation can still be together, and we can really truly build generational wealth, especially in the Black and brown community. We have to do better. We have to do better.
Great, great. Simply put. So as I was listening, I noticed both of y'all touched on, um, and I believe you used the term. Correct me if I'm wrong, Megan. With living benefits, and then I heard Victor also mention how like when something happens to the family member and they fall ill, they're in a position to where they can pull some of that money, or it covers expenses moving forward to make sure your family is good. So when I hear that, for people with limited knowledge, that tells me that there's more than one type of insurance. Can y'all kind of elaborate on the different types of insurance and like the different lanes and what those different types mean?
Absolutely. So, well, a lot of people they know about their term life insurance. So that is for a limited amount of time. Okay. And so the max you can have a term policy is for 30 years. We see a
Okay.
lot of people, you can get a lot for less. So say like, man, I need I look for $500,000, but I'm probably paying maybe $30 a month. I'm just needing something to make sure I get covered. And so that's, another option. Then we have another feature called return of premium. And still a type of term policy, but with that term policy, it's also utilized as an investment tool. And no one always thinks about, yes, we have the living. We're going to talk about those living benefits, but the investment tool. We see people utilize it for mortgage protection. Again, they are covered for their those total 30 years. But also, you're going to need something after those 30 years. But hey, again, you get a lot for less. And also, if you're still living with that return of premium policy, you do get those premiums paid back to you. And so some people are like, you know what's in it for me? They're like, I got coverage. It's over. But maybe they like the feature of that investment tool. And then we have our different types of permanent policies, which a lot of people I've mentioned the whole life, which is a permanent policy, but it's generally just focused on the burial. Then we have it's called an IUL, a Index Universal Life policy, which is a permanent policy where you do have features called living benefits. Say someone, he gave a really great example about someone who had a stroke, cancer, car accident, so critical injury, terminal illness. Any of those things fall into that line. In any of those categories, you're not able to do 2 to 6 daily functions. Your life insurance will be able to catch you a lump sum to be able to care for those medical expenses or whatever that financial burden is due to that illness or critical injury.
Okay.
So those are just the different types that we typically educate a lot of our clients on and our agents on as well, to make sure that they know they're not just locked in one thing. It's so fast, it's so broad, and it's so many different things that can really affect and support the living. And so that's why I love to do the education with people, because it literally opens up their mind. Like, wait, so I can still be alive and still benefit from this? I'm like, yes. Because how many times have life happens? We're getting older, okay? My back ain't the same, okay? 64 is different from 34. And so they understand things are going to happen. So this is the new form of life insurance, and that's what we love to educate individuals on. And so whatever fits your fancy, that's essentially what we want to make sure that we're supporting individuals in. So whether it's, hey, I just need coverage, but I need a lot for less. All right, well, awesome. I want to look at something more affordable. Hey, I want to look at something that's, hey, I want to be covered, but also, I want to utilize that as maybe in more of an investment tool. You know what?
Right.
Awesome. Now, wait, maybe I'm looking for something that is permanent for me, but also I want to have something that I can sustain, and also it can actually pass down the next generation, which we have those pieces called cash value as well, that we'll probably get into later. Aside from the living benefits, those living benefits are also connected to some of those term policies as
well. Okay. You can add something, Victor?
Yeah, what she said, it's real simple with life insurance. It's 3 different types. Like you said,
Okay.
return of premium, and permanent policies. Regardless of now, however we consider it, we're all participating in that. Say for example, the banks. There's this thing called bank-owned life insurance. This is just free game for everybody. So, bank-owned life insurance, the banks actually take the money we have in the bank accounts, and they invest into life insurance themselves, and they get a guaranteed rate of return.
They take your money.
Yeah, 3% or more. So we're talking billions of dollars. Every single bank does that, and but we don't use that. The other benefit to life insurance as well is a major way to avoid taxes. Life insurance is one of the only industries where you can, grow your money tax free. You can also pass the money on to the next generation without it being taxed. So there's a lot of things that people aren't really aware of. And because of it, the wealthy people use these strategies to be able to hey, set themselves up to where they can have more taxes taken down. We all try to avoid taxes because Uncle Sam's coming for all of us, right? Um, retirement. It's so much to it, but it's very simple.
Okay. Cool. Um, so I was just listening to y'all when y'all talked about the term life insurance, which was the temporary, and it was only good for 30 years. So say we have a youngster on here that, that's intrigued in the life insurance, and they get just to just say somebody 20 years old and they get a term policy.
Yeah.
Are term policies like, do you renew them when they're done? Like it goes for 30, then do you get another one, or how does that whole process work?
Yeah. So with a term policy, so say for example, we got a 20-year-old male. Let's say he has a 30-year policy, right? He gets it when he's 20 years old. So at the end of the policy, so every year, every month, he's paying his monthly payments. When he gets to be 50 years old, then his policy would expire, right? So the moment that you have a term policy and it comes to the very end, there is no more. That it's just is what it is. It's really affordable. It's benefits to term, but the main thing is that a lot of people don't understand when they say they got life insurance, they don't realize they got a term policy and it's due to expire. Everybody should definitely have a permanent policy. So we always advocate having more than one policy. The wealthy people, they don't just get one policy. I don't know where the language came from, but a lot of people in our community just say like, just get a life insurance policy and they believe in getting one. But wealthy people, they have multiple ones, right? So yeah, I guess that kind of.
But to kind of answer a little bit more directly, it is okay for an individual who is 20 to, hey, this is what they can afford now. They're just looking for coverage. But you got to think, when they want to either quote unquote renew or get a new policy, they will be basically looked at it at age 50. So that premium will not be the same that they were at 20. So some people are like, oh yeah, I just kind of keep it and can roll over. It does not work like that. You will be again applied for age 50. God forbid, you had any health conditions in between that time. Maybe you're uninsurable at the point of at 50. So definitely, I would say if you are, in your 20s, you're pretty healthy. Definitely look for more of a permanent policy, if you can. If there's something that was within your budget, but nothing tells you, says that hey, I want to, look for an actual additional policy to have a more permanent policy. But yes, after that, those 30 years, you got to think about what the premium cost will be at age 50. What is your health looking like? What is other risk factors? Are you got license? Again, is there felonies? What has gone in your life that they will all basically come in together to figure out if you can actually be insured. So with so many different things that people don't realize, that maybe your 20s, 50s, and things that you've done in life sometimes does affect you actually getting covered in policies.
And then the other thing to add to it too, as we get older, a lot of times people can't afford more when they get older. Like when they get to retirement, their budget is very fixed. And a lot of times when they start looking at life insurance when you're older, you get a lot less coverage and you got to pay a lot more. So, yeah.
Okay. And for those of y'all who are just joining, we're talking about life insurance today. Um, Definitely, if you hear anything that touches you, intrigues you, or any questions that you have, please feel free to get into the chat room. We will be sure to bring all of those questions to the platform. So we got a question in the chat from Summer Brooks. Says, I know they talked about individual, but is there family coverage, like for me and my children?
So it varies on the company that you work with, but more times than not, it's really individual. It's best to have it as individual because let's say, for example, like let's say a wife and a husband, right? And they have a family coverage plan. If the husband passes away, that affects the whole policy. But typically it's individual, so person by person, and you can have multiple policies. Sometimes to get a little bit more specific, say it's a parent and their budget is $100, right? And the most they can afford is that. And let's say they get about a half a million in coverage, and but they still want to include their kids. They can have this thing called a rider. So basically, on with that rider, they pay a couple of dollars more on that, but their kids are covered up to age 25. So that's one of the other benefits. If like, you know what, this is my budget number. I want to include my family. That kind of helps, but typically it's not like a whole nother adult. Typically, it's only the kids of that person. But overall, in general, life insurance is very like individual. Yeah.
Okay, so
Thank
for the sake of clarity, so say you have a mom, and let's say you have a couple and they have two children
Yep.
and they want to cover the entire family. The best route to go is to get an individual policy for each one of them, correct?
Yep. So let's say, for example, Mrs. Smith, hey, you're going to have a policy for your individual self. Mr. Smith, you're going to have an individual policy for yourself. If money is an issue and the budget is maxed out, hey, we can add your son as a rider to either one of those policies or both. In best case scenario, it is best to have a policy for every individual person. So like kids policies, typically for kids that are under 18, they don't run more than, you can get a solid policy under like $20. Just as long as the person doesn't have any major health ailments or anything like that.
Gotcha.
Yep.
And one key thing that someone on social media had connected, who asked me and actually protected her son, they had asked, hey, I didn't know I can actually get a policy on my son, on my children. I'm like, absolutely. You can cover your child up to 14 days old. So if you think I'm not gonna cover this baby at the 14 days, oh, I'm about to do that. So yes, that's the earliest you could actually cover a child, and that could be like $5. I mean, I'm like I said, it could be it's pretty affordable the earlier you do it. And I always talk about when I talk to clients or individuals, that's why our counterparts are having $1 million babies. They're literally getting their policies so early in life. So by the time they're 18, college tuition is covered. They're thinking about, oh, maybe they want to go into a business, whatever they're wanting to do. Oh, let me just take that off that tax free out of their personal life insurance policy to be able to fund whatever. Oh, you need a car, son? All right, let me take that out your own policy. You can take that out your own policy. Oh, daughter, you're looking at going to college. You need 10 bands. You need 20 bands. Well, at this point, your policy has grown from $500,000 to $1 million. When you think
Wow.
about it, you let it sit. Now they have literally created generational wealth just by utilizing life insurance. Because you can, again, take that out tax free. And again, like I said, it can be used as an investment tool. You can be your own bank. I always tell the story of how Master P got started and how Walt Disney got started. Walt Disney was looking for ways to, get what we know, the magical place on earth. And he went to multiple different banks. He got denied. The Walt Disney got denied multiple times, and this is hundreds and 50 plus years ago. And someone educated him about his life insurance. He said, don't you have life insurance? He was like, yeah. Well, you can utilize your life insurance policy to fund what you need. And again, where we know today, Disney World, Disneyland, he utilized life insurance. Little people know that.
Yeah.
Because someone educated him back all the way back then.
Yeah. And I would say the biggest piece of the story is he had parents that were willing to invest in him, because being 18 and coming and having a large sum of money out of nowhere, like, that's not normal. His parents were methodical, and they either spent a large sum of money monthly from the moment they were born, maybe $200, $500 a month. I have no idea, but they had enough, like she said, to put a down payment on starting an amusement park. And we were just talking about earlier today, Disney today, I had no idea they own ESPN. I had no idea. You know what I mean? But that's what people do. Like, if you really want to make a change and invest into your future and your legacy, like, life insurance is the simplest way to do it. You know,
wow. Y'all hear that? Did y'all hear that? Up to 14 days.
14 days.
You can get a policy on your kid and allow that money to matriculate up until they become of legal age, and then look at all the possibilities that are there for them.
Exactly.
No
by doing
GoFundMe. No GoFundMes.
Yeah. One thing I want to share one story, because I thought this was powerful, and then I never thought this would happen to us. We have a friend, it's a married couple that 3-month-old baby. Now, nobody thinks about this. And literally, it's the week before Christmas, and we get a text, hey, with a whole GoFundMe. And we're like, and with their daughter, so their 3-month-old daughter had passed in their sleep, right? Nobody thinks this. We actually hosted a Christmas party that same week, and we're playing with the baby girl and everything, and find out that, boom, she passed a few days away. So parents, many people probably haven't been through that, but for the people who have or know somebody that's been through that, it is so important just to get those $10 policies on your kids. Well, even if you got grandkids, get them, because it's not worth it. It's not worth going through that pain whenever you're like, I don't know what's going on. Like, I would be distraught if God forbid, something happened to my children, right? And then I got to come up with the money that I don't got. You know what I mean? So I just wanted to share that story because a lot of people aren't aware of that, but it happens, and we never know when life will happen. That's the main thing. We never know when life will happen.
Okay. Wow. All right. Thank you for sharing that. So most people, when you ask them in terms of insurance, be it health insurance, life insurance, on down the line, most people, well, not, I can't say most, but a lot of people will tell you that they have insurance through their employer. They go to work, they have open enrollment, everybody signs up, they get the health insurance, they get dental, they get vision, they get life insurance, they do 401k. Like, so what's the deal with the work insurance? Is that a good insurance to have?
Great question.
Do we want to get away from that?
We want to get away from that. If you say, I got life insurance, but it's through my job, so I'm good, you're not good. Okay? Because as we're going through all the regulations, you don't even know what you signed up for. There's been several cases that if you were to pass away, unfortunately, there's people who weren't even able to benefit from that life insurance unless they had passed away due to something on that job. But they're like, oh, I got life insurance. It's through my job, though. I'm good. Like, no, we don't read the fine print. Your job is not a life insurance agent. They're not going to the details and actually educating you on actually what you're covered with. They just making sure that, hey, I'm just make sure everyone got something so I don't get fined as a business. But to actually sit down with a licensed agent to actually know what you're truly covered with, that's 100% important. There's people who work 30 plus years and still can't, and their children still can't receive their life insurance policy or anything that they worked hard for. Sometimes even pensions. And so it's really important to have something outside of your job because you truly don't are not protected. And if you lose that job, you are not covered.
Yeah.
It doesn't come with you. Okay.
So let me ask y'all, like I would frame this for the audience. If you got kids, right, would you let them a stranger take care of your kids? Most people wouldn't, right? And you would know every detail. You vetting that person. You probably know where they live at, like all the details. And a lot of us don't. Like when it comes down and we compare it to our personal jobs, most people haven't even been given any paperwork to even prove that they have a life insurance policy. And then on top of that, the whole principle of like you're not going to leave your kids at risk in any kind of way, or your family or your loved ones in any kind of way. But that's a blind spot, financially to beat up your family. So it's that's just something to think about.
Wow. So all these millions of people with life insurance through their employer, y'all telling me that this insurance is only good as long as you're with that company.
Correct.
The
Yes.
moment you quit, the
Or you
moment
take
you get
off.
fired, it's gone.
Or COVID 2024 happens, God
Yeah.
forbid.
Because there's mass layoffs going on right now.
Wow.
Yeah.
And typically those policies are only good if it's a work related
Injury or death.
injury or death.
You know.
Wow, interesting. Yeah, I caught it the first time y'all said it. I wanted to repeat that for the audience member who was replying to a text and missed it. Like, wow, that's crazy. So also, Megan, earlier when you was talking, I heard you mention the term cash value. And you
Yes.
said we probably would get back to that. Can you
Yes.
elaborate on this cash value?
Cash value, yes.
Yeah, and so like I had mentioned earlier, we can also utilize us being our own banks. I gave several examples. I'll talk about the $1 million baby. So yeah, you probably start off with a $500,000 death benefit, or maybe 200K. But you let that policy sit and let it grow. It grows over time. It'll grow and grow and grow, and you can surrender funds outside of your life insurance policy. That's why I say you could be your own bank. And people always think, oh, if something happens to me, no, do I just get the death benefit? No, you'll get the death benefit and the cash value. They're two pots of money.
Okay,
So baby, yes,
let me interrupt you for just a second. What does it mean to surrender funds?
it means to take out the funds, take out
Okay.
money. Sorry,
Okay.
for a technical term. But yes, it's to take out tax free the money that has built up in that policy.
Okay.
Yes.
And it grows tax free.
Wow.
Yep.
Okay.
Yep.
So
Sometimes with those kind of policies is with cash value, typically you get on anywhere from a 5 to 12% return on your money. And a lot of people are not aware of that part.
you've been informed.
Yes.
You have been informed. Yes.
You've been informed. Are y'all listening to those numbers? So a couple other terms that I wanted to throw out there that that I've heard before. And one of them is lost money. Can you guys elaborate on the term lost money?
Lost money. What do you? Can you give an example?
Honestly, I don't have an example. These are terms that I've heard mentioned before. So I thought they were, like general terms
So if
in
you're
the
probably
world.
talking about the retirement focus, is that where you're kind of
And that's
probably
possible
with the
because
retirement?
that was another term that I had heard about like retirement crisis and what that
Yeah.
whole thing was. So can you elaborate on the retirement crisis and what that means?
Yeah. Yeah, so we've all seen it. We always seen that old person at Walmart, or that baby boomer working somewhere, and I'm sure everybody wondered, like, why are they doing what they're doing? So the problem in America is a lot of people. They relied on a few items. So they relied on the 401k,
Okay.
they relied on the pension, and they relied on Social Security. So that is the three-legged stool. Okay, so yeah, stool. That's where everybody's retirement or financial. Yeah, three legs, three legs stool. Yeah, three legs stool. So those those three avenues are the way that back in the day how America was retiring. But right now, if you look it up on the Social Security website, their funds are supposed to run out 2035. I think it's going to run out sooner. The 401k, it's a good opportunity, but a lot of people don't realize that your money is in the stock market, and when the market is good, your money goes up, and when the market is down, the money goes down. So, like in 2022, overall, the market went down a negative 20%. So, if you had $1 million, the market went down 20%. You talking about 800,000, right?
800, yeah.
800,000. So, like, are you trying to lose that kind of money? You know, but majority of people are miseducated on the options for retirement, and they have 401ks, and they get upset and mad and angry when they find out that what's going on with my retirement money? I done lost $2,000, $10,000. I worked so hard for this. So right now in America, people have not saved enough money. They just, for whatever reason, because this conversation of financial literacy hasn't been brought to mind, and there is no such thing as a pension anymore, especially for people who are younger like us.
Millennials and over, it's no such thing.
It's done.
It's no such thing.
I was like, what is this pension thing? I hear so many different retired people that are getting $2, $3, $4, $5,000 a month from their pension. Companies don't offer that anymore. And then a lot of the companies that actually offered it, like American Airlines is one company that offered pensions. They bankrupt their whole situation with that. There was I forgot what the name of the company. I think it's like IHL or something like that. It was a freight company. This is a viral video that went on with TikTok. This guy, is nearing retirement, and he finds out that there is no money in his pension. You know, and just like going crazy. Like, imagine you got a promise to work for us for 20, 30 years, and you're supposed to be set for the rest of your life, and you find out that, man, I have no money. So the 401k, you got a possibility of losing money. And pensions, for the older generation, they had it. Some of them don't come through like they say they do. And for the younger people, we don't have any options.
We're paying for the Social Security of the individuals who are retiring right now.
Yeah. And the other piece of that too is the baby boomer population is the biggest population in America. Yep. And they're all retiring in like the next 7 years. So all of them are collecting that money, right? And in reality, the country can't really keep up with that. So it's a matter of, like, people don't have enough for savings. People haven't had a conversation of retirement, and there's a lot of people that's just going to continue to work because their bills are too high. Like, I remember my grandma, she had got this nice Mercedes. I was like, ooh, that thing is hot, and I was like, we was driving in there. I was like, Grandma, let me have your whip. Let me have your whip, right? So I'm like, cool, right? And then she was like, she's about to retire. Like most people, when they retire, it was like, yeah, like, you made it, great job. And she retires, and she had to return her Mercedes. right? Other things happen to where she kind of had to scale back. She's still good, but it's just like I've seen my grandma to where she's worked a little bit, and she's been a nurse her whole life. So and I think she did pretty well for herself, but it's just a lot of people are in that predicament.
And we do help people with retirement solutions. They're called annuities. You want to talk about that too?
Yeah, annuity is a life insurance contract between the client and the life insurance company. It's a retirement product, and basically the three benefits that you have with an annuity is one, lifetime income. The second one is so tax advantages, and I believe the third one is just for growth overall. So a lot of people are not really aware of annuities. So like we looked at an annuity for our daughter, and this a minimum to have an annuity is $10,000. And so we looked at that, and having $10,000 for our daughter. She's about to be 2, so we put $10,000 in today, and when she gets to be 50 years old, it'll be over $30 million in that contract, and she'll be able to have lifetime income coming to her when she hits retirement age. So it's stuff that we never knew about.
And essentially, what we're doing with annuities is people who have worked so hard for their worked hard in their jobs. They're like, I don't want to lose any more money. These are the money that they already have. We just essentially help them roll over their 401ks, the Roth IRAs into an annuity. So there's nothing that they have to build up in that sense, the way he was explaining it. But there's people who already have money put away. We just help you essentially put your money from a variable vehicle to a very safe vehicle. That's essentially all that we're doing. This is the money that you've already worked hard for, but you just don't want to lose it anymore. Or it's, a lot of people had, took those tax cuts. They weren't 59 and a half, so they was like, inflation, COVID, I got laid off. So a lot of people took those hits. And so I know a lot of people I've talked to, they was like, honestly, I flushed a lot of it out. I took a lot of my 401k out because I was just trying to survive during a time where life was just unpredictable. And so essentially, even if you have the minimum of 10K, that is, we can also help, individuals roll that over who have, still protected or continue to keep what they worked hard for.
Good. So old retirement accounts, like she was saying, 401ks, 403bs, previous pensions, all those things can be rolled over into an annuity, particularly with fixed index annuities. Let's say annuities. Annuities.
It's three-legged thing. People gonna be doing this. It's gonna be so funny to me.
The fixed index annuities, you never take any losses. So you don't have to deal with the same kind of issue with a 401k where you're worrying like, oh my God.
The stock market doing a day.
Yeah. With a fixed index annuity, the insurance companies ensure that your money never takes a loss. So if you put $100 in to the stock market, typically, and then the market takes a 50% hit, now you got $50. But if you put it into a fixed index annuity, you put that $100 in conceptually, then you would never take any loss. The insurance company will make sure you have your $100. So those are the strategies that we're doing for people who are like, you know what, I got this money for retirement. I'm not trying to lose it. I'm trying to figure out a solution. I need something. A fixed index annuity is an option. So.
Okay. Is there a certain level of maturity your policy needs to be in order to get the full benefits?
Yes, so you have to let the policy, if you're talking about the permanent policy that I was mentioning with the cash value, it has to sit for the 11th year of the policy is when you can actually take out that cash value. If they're talking about the cash value, it has to sit for at least 11 years. You have to have that policy. It'll mature by then.
No. Okay. So is this into the 11th year, or it has to sit a full 11 into the 12th year?
It has to be the
11th year.
The 11th year.
Yeah, 11th year.
The 11th year of that policy. Yeah.
So with a permanent life insurance policy,
Yes.
this isn't retirement. This is life insurance policy. Back to that, yeah. The 11th year, you can have access to the tax-free cash that has built up in your policy.
Okay. And so we have a question. This is actually something that already covered, but is there a policy that I can take money out of?
Yeah, typically it's two different types of policies you can take money out of. It's whole life policies and index universal life policies. But whole life policies are more so like the beepers, like the cell phone devices back in the day. The IULs, index universal life policies, are like the iPhones. They the hot stuff.
Yeah, I don't know about those beepers, man.
Yeah, I mean, I know they don't know nothing, right? So yeah, but you can. Those are the ones where you can become your own bank, grow tax-free money, and also, leave a legacy to your family.
Nice. All right, so we got about 8.5 minutes left. So anything else that y'all feel like the people should know that we haven't covered, or questions that haven't been asked concerning life insurance, as well as make sure you guys let the people know how to get in contact, how to utilize your resource.
Well, I would say the biggest thing, if you're kind of like on the fence about life insurance and trying to figure out what's the next step from this conversation, reach out to us. We'll give our contact information. My name is Victor Mays. You can find me on all platforms. Her name is Megan Mays. And also you can reach out to Jamarcus.
He love that, y'all.
So I would say just set up a free consultation with us just to learn more. Don't try to do your own research. It's not going to work. Like, you can't necessarily, like, there are options, but you need to talk to a licensed life insurance agent to help guide you through the process that's actually active, right? That actually can get you in and show you some products that might be very beneficial to you. And you might be thinking, I'm good. I don't need this. I'm already set. It's okay. There might be somebody that that could benefit from the information. You might find life happens with somebody else and you're like, man, I just learned this information that would have helped you. I wish I would have shared this information. So just like, we're empowering the people and just being a blessing. So we're free to always educate anybody and everybody on the topic.
And I would say, hey, I'm gonna say, do your research, okay? Look, integrity.com. Very prominent. We are under that umbrella of prominent life insurance, and so again, but I will say, talk to a licensed life insurance agent. Don't just talk to willy nilly. They're gonna tell you everything. But you definitely want to get credible. Talk to a credible source about maybe the different options that we had mentioned. Maybe like, oh, what was that term? What was the ROP? What was all the universal? Let me look at those things. So definitely you can follow us. We have our emails. We have shared our emails on the flyer, but we can also, I don't know, put it on here or pin it somehow. Definitely email, call. We're willing to help people across the country. We are licensed in multiple states across the country. So we have run a national business where we can help people across the country, no matter where you're from. New York, you're in California, or you're in Georgia. We're here in Georgia. So if you're in Georgia, Peach, hey, Georgia peoples, Indiana, everyone, we're across the country. So we're here to help answer questions. Again, mompreneur, y'all. Mompreneur. I'm not going to hide it. It's real life. You know what I'm saying? And we're here to help, people across the country. And also, if you're looking for an opportunity to again, like, hey, we talked about a lot of the financial crisis. You know, if you're looking for an opportunity to make money, this is an amazing industry. A 63 trillion, yes, I said with a T, $1 trillion industry, where a lot of people are. Yes, my love. Thank you. And Daddy's on duty. $63 trillion industry where we do help people get licensed, do what we do, get the education, and also help their community. We can only do it for so many people. Yeah, it's so many networks across the country that we want to make sure that you're getting proper educated, that you can educate the next generation of people.
Nice, nice. So everyone, thank you this evening for joining us. I hope y'all were definitely empowered, informed, on life insurance. I think we touched on a lot of things. I definitely learned a lot. Different terms. Like I said, there were things that I had heard before, didn't know. Y'all definitely gave me clarity on that. And I think it's a widespread thing within our communities, but I think the biggest problem is just not being informed and not knowing enough about life insurance. I mean, outside of course, your work insurance, and we touched on that, and how that whole process works. Because in most situations, we're dealing with individuals that, if it wasn't for employment, they wouldn't have any kind of policy. Life, health, dental, anything. It typically comes through work. So they think that once they get a job and they get these policies, that they're okay, and they're really not. And then, like you talk about the small print, sometimes they don't even understand the big print, because there's terminology and stuff that is used that a lot of times we just don't understand. When you get into these different fields, audience, and they start talking that language, man, like, we have to arm and inform ourselves so that we can understand what's being talked about in front of us. Be it in the life insurance realm, be it in the banking industry, be it in the criminal justice, there is a different lingo that is used. And a lot of times we don't know, or we're intimidated by the things that we don't understand, or we're intimidated by money. Like, when they start throwing figures out there and you start looking and you're trying to budget, like, we see the end game, it looks nice, but on the way we like, that's kind of tight, you know what I mean? But not really understanding that the reward, the risk is worth the reward when you're dealing with that. Like, I'm currently reading this book, How to Speak Money. And it let me know that all I know about them bills, it's a whole different game. So definitely arm yourselves with the information. Knowledge is power. Um, if you don't know, if you still have more questions after this broadcast, the live will be posted tomorrow. You can always come back and re-watch the episode and gather that information again, take notes. Or my advice would be is to just reach out to them, get your questions answered, allow them to take you on a journey of getting that knowledge and arming yourselves so that you can protect your families. Because as we protect ourselves and collectively protect our families, we enrich and we better our communities. Let's get it. We are stronger together. I thank y'all. I thank y'all for the time this evening, for joining us,
Thank you so
for
much
giving us
for
that
having us on.
information. I thank Amaya for the intermission.
You know? She's like, come on, Boopa. You want to come on?
Yeah, come on, let her
Come
get
here,
some
Boopa.
screen
Come
time,
here.
man.
Let's see Papa. See Papa. She said, oh, you called me? Yeah, she said, yeah. She said,
See,
I'm in this.
that's what it's about right there, y'all. Protecting these families, protecting our kids, and building stronger and more enriched communities, man. That's what it's about. That's beautiful right there.
Absolutely.
So The audience, I appreciate y'all time. Appreciate y'all for coming on. We have another comment that just hit the chat. Leave some for your children's children.
Yes, 100%. It's a legacy building. That's who we are. Yielders of a legacy organization. That's what we focus on. The legacy of this family.
The legacy. There you have it. Again, I thank everybody for your time this evening. We'll be back again next week, 7 p.m. Eastern. The replay broadcast of this will be posted tomorrow on the YouTube channel. Everyone have a good evening. And again, if you don't have the information, you can look at the flyers that were posted. Their emails and contact information are on the flyers, or you can contact me and I will connect you with the two of them to make sure that you guys get protected. Everybody have a good evening. Be blessed.
Bye.
Iron sharpens iron. Good night, everybody.
Say bye. All right, Instagram, we out of here too.